Hello traders, Gary Wagner here. It is 12:24 in Honolulu, 5:24 in New York on Thursday, 21st day of December 2023, and this is the daily report for gold and silver. Today the government released its final revision for third quarter GDP, revising it downward from 5.2% to 4.9%. This strengthens the likelihood of the Federal Reserve beginning to cut rates as early as March of next year. Lower real interest rates has a bullish impact on the precious metals such as gold and silver, and a bearish impact on treasury yields as well as the dollar. Gold today gained $13.40, basis the most active February contract, taking gold to $2,057.80. The dollar lost significant ground, giving up 0.55%, taking the index to 101.48. We can see that in terms of the closing price, it is the lowest close since the fall of the dollar began at the beginning of November. Silver had an inside trading day, opening and closing inside of the real body of the prior candle. It did close lower when compared to yesterday's close. The decline today was approximately 4.5 cents or 0.19%. However, it is still robust at $24.58.5. As I spoke about on yesterday's show, we did send out a trade alert to move your stop up to $24.22. I'm putting it just below yesterday's low, and all traders that are actively in the silver trade should have moved their stops up by now. A longer look at gold, we can see the lows that came in at the beginning of what I have labeled the October rally, from approximately $1,840 up to the all-time record high that was very short-lived at best. Then as it declined approximately by 50% in terms of the retracement when we look at this data set. From there, it did move up a bit, trading to intraday highs of approximately $2,059. But many of those days it actually closed below, and we didn't get any surge above that price point. Today we have seen our highest close since gold corrected after the record high, but only by $1 or so. It does seem to be moving sideways as we go into the holiday season. Of course, tomorrow will be the last trading day and then reopen again on Tuesday in New York. Traders, I do remain exceedingly bullish for gold prices next year. Our technical studies that we will present at the end of this year, beginning of next, are looking for gold to breach the all-time high of 2152 and challenge 2200 and above. More on that as we get towards year end. This is a Henkin-Ashi chart that we converted from our candlestick chart. Although gold has been moving higher, you can see that these are very small-bodied candles with lower wicks, which indicate that the strength of the uptrend has been diminishing. However, you get a completely different picture when we convert our candlestick or Henkin-Ashi to a three-line break chart. That is analogous to a point and figure chart in that it compresses time and only changes the box when certain criteria is met. Typically, the way we have set this is a three-line break. We have to get 3 consecutive highs before the box is broken. You can see that it is in a transitional uptrend that shows a potential for further increases in price. We are looking at a daily candlestick chart of silver futures. We are still long from $22.48. We did, as I said at the beginning, raise our stop to just behind the low of yesterday's candle. When we take a look at silver's price action for the last quarter of this year, in other words, October to current pricing, we can see from our fib retracement from the lows of about 2180 up to these highs above $26 that the correction that followed was just below the 61.8% retracement level at 22.95 unlike gold that retraced 50% and is currently trading up above the 38.2% fib retracement, which is what we were looking for. When we convert our Japanese candlestick chart to a Henkinashi, a Japanese average chart, we can see that there is the absence of lower wicks over the last 2 days, a much more bullish signal than we are getting in gold in terms of strength of uptrend. The three-line break chart does look different than the gold three-line break chart in that the succession of new price highs has started the next box, although this is exceedingly bullish, and I do believe the $25 target is still where silver will head over the next couple of weeks. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.